Hello, hello, everyone. My name is Linda Peterson, and welcome to Real Estate Investing for the Win. I'm super excited for today's presentation. I have invited an amazing friend that I've known for a very long time who has focused into mobile home parks. As many of you know, we covered RV parks last week. You're welcome to catch that one, the replay on it. But this week we're going to be covering mobile home parks, and I'm excited to learn alongside you. And then I think RV parks are similar but different, and I want to get to know more. So welcome, Jens.
Thank you. Thank you,
Super
Linda.
excited to have you.
Thank you so much for letting me be here. And I'm excited to obviously do some Q&A at the end. Like we said, we start at 10,000 feet view and we can zoom in. But as we know, we only have so much time today. So I'm going to have to kind of just give a broad overview. And I'm sure there are questions that people have that want to dig into more details. And I'm free to do that afterwards as well, or give my information so they can contact me.
Beautiful. And you're a seasoned investor, and you transformed out of the medical career, and can't wait to hear about it. So what we're going to present today at a super high level is the appeal of mobile home parks, right? The market dynamics and the impact of mobile home parks, investment strategies and benefits, challenges and opportunities, and then some ninja tips, right?
All right. I'll see what I can come up with.
All right. So Jen, give us a little bit about you, who you are, and what you've done in real estate.
Sure. I'm originally born in Sweden. I am 49 years old. I came to the US 1996 to study medicine, and I graduated with a doctorate degree in 2002. I had 3 clinics and I was focusing on pain management. And I had fun along the way. But if you guys have had businesses with lots and lots of employees, you can also relate to me as far as the challenges that goes with that. And I think the health industry is one of the most regulated industries in the country, actually. So it's pretty tough. You feel like you're swimming upstream sometimes. So I was always interested in real estate, and I actually met Linda at a big coaching event years ago with Fortune Builders, and I was curious to start investing. And this is like around 2010, 11, 12, somewhere around there. And I started to invest and flip homes, and I started to do that on the side a little bit, more like a hobby. And I did that until 2017 when I sold all my clinics, and I took a very, very major decision in my life, actually, and that was to go in a total different direction. Okay, it has nothing to do with health or nutrition or anything like that, and that was to climb in full speed into full time into real estate. And I was very focused on the apartment complexes, 10-plex, 30-plex. I had quite a few apartments at one point until I met a guy from Utah who actually asked me, "Why are you not investing in mobile home parks?" And I looked at him like, I don't like them. They don't look appealing to me. And why would I do that? And he said, "But have you ever thought about something? $1 from a mobile home park is the same dollar from Class A apartment complex downtown Miami with swimming pool." And I know he was right. So I'm like, okay, I agree with that. So why would I go into mobile home parks? And we spent a couple hours, and that changed my life, that conversation, because he opened my eyes for the difference between the two asset class. And there's nothing wrong with apartments. I still have some, but my focus these days, 90% of it is on mobile home parks, RV parks. You can be more creative with this. And the two biggest things that I think is important to bring up in this short webinar, it has a high resilience to economic downtrends, So the economy goes down, my business goes up, okay? Because there is a lack of affordable housing. And if you can't afford to live in a mobile home, you would have to move in with family, or you may have to even live in the street. So that is kind of like the last stop, right? And when people lose their job or they have to downside for economic reasons. So I'm very blessed to have met this guy, and I've learned a lot along the way, trial and errors, but fail forward, like they say. So
Mhm.
I feel like there's way more pros than cons investing in mobile home parks or RVs.
Mhm.
Yeah.
Yeah, and you know, we've had a couple of webinars kind of leading up to this where the market's changing, and it's changing at a faster pace, I feel, than we've ever seen before. And so you really have to be able to be nimble and flexible. But what we've seen from an investment standpoint is a Class A multifamily might be great, but you can't take it down by yourself. You become a piece in the pie.
Mhm.
Whereas more maybe mobile home parks, like you can really be a dominant figure within that space than you could in a
Yeah.
multifamily.
Absolutely, Linda. I agree with that 100%. There's less competition in this asset class, right? And like this guy told me in Utah, he's like, when I go in and I look at mobile home parks, a lot of other investors, they would run the opposite direction. And I start running in that direction because I know it's an opportunity. And having that said, there is way less competition because people are afraid of mobile home parks at times, and
Yeah.
so are banks. So instead of shying away from that, I'm looking at it as an opportunity to really go in. Yes,
Hmm.
like the big players like Warren Buffett, talking about stocks. When the stocks dips, that's when you should buy. Okay. And same thing here, when people run in this direction, you got to ask yourself, what's going on? Is there an opportunity over there that I should, look into? And I have, and it's been great for me.
That's amazing. Well, let's go ahead and move to the next slide. So understanding mobile home parks, because I think it's important to really define the asset class. So modular homes versus mobile homes versus manufactured homes, they all kind of sound similar. So Jens, how would you define the difference between them?
Yeah, first out, I actually try for this seminar, I'm using the word mobile home and mobile home parks, but I try to use manufactured homes and manufactured communities. It sounds more classy, it sounds more sophisticated. It's the same product, but when people hear mobile home park, they usually think of that mom and pop with 15 units and all looks pretty shady. We are trying to buy bigger parks, reposition them to look like communities,
Hmm.
if that's paved streets, connecting to public water and so on. Obviously, modular home is more set, it's fixed. Mobile homes, they are classified mobile homes because they are not fixed. And the insurance company have different definitions. I don't know if you're familiar with that, Linda, but usually when they deliver a mobile home, um, they want you to cut the tongue off at the end, right? So the insurance actually goes down when you cut the tongue off, and it's still a mobile home, obviously, but
So
there's
what do
some
you
things.
mean by the tongue?
So the metal frame basically that they come with. I'm sorry for not explaining that. Where they
No, it's
haul
all good. That's
or
the
doing
beauty of
that.
this.
Yeah,
Yeah.
metal tongue. Sorry. So they cut that off just to make sure it can't be moved, relocated, pulled off the park. And there are many details that goes into this, but it is at the end of the day a manufactured home that can be moved from one point to the other.
Hmm. Exactly. Okay,
And they have
great.
titles. They have titles like a car. There's not a deed like a house that's fixated.
Yeah. Okay. And then mobile home parks or manufactured communities, right? It's you've seen that people are more receptive to moving into a manufactured community than a mobile home park just by the name.
The stigma, I guess, is like some of the cons, I guess, with mobile buying into this or investing in it. The stigma still for decades has been, why would we invest there? I don't want to live there. Well, you don't have to live there. That's a good thing. But
Hmm.
there are a lot of opportunities there, and I think it's proven the last 10 years have really shown that.
Beautiful. Thank you. Okay. And then talk to me about foundations, because when I was looking up mobile homes, I see, to build a foundation or to not build a foundation. How's the difference and how is it treated differently from taxes and banks?
Yeah, so I mean, I don't do a permanent foundation in my parks. Even though banks they would love that, and insurance companies and lenders and so on. Um, Mobile homes, the setup of basic mobile homes without a foundation is usually around 8 to 12,000, depending on where you are in the country, and that is
Mhm.
for a full hookup with plumbing and water and so on. Obviously, the infrastructure is there, but it's way more costly for permanent foundation, and it's not something that I utilize in any of the parks that we have.
Yeah. Okay. Great. Sorry. And then the other piece that I caught is that when you build a permanent foundation, it is now taxed as real property. But when you don't, right, and like you keep the tires on, you can deflate them, but then it's considered separate than the land from a taxing perspective. Is that correct?
Yeah, that is correct. And something else that was funny, I learned that years ago too. The deck or the steps leading up to the mobile home cannot be fixated to the home itself, because then they will consider, at least many counties here in South Carolina where I'm at, they will consider it being a fixated home or fixed home at that point. So the rules can change a little bit there.
Hmm, that was a good ninja tip.
Yeah.
Okay, so the appeal of mobile home parks, right? Growing demand, supply and demand. So talk to us about this.
Yeah, I mean, just in 2020, there was like 40 million Americans that were living on, minimum salary or wages. That's a lot. So there's a huge demand for affordable housing. And that's obviously something even Warren Buffett saw in 2003 when he bought Clayton Homes. And I'm sure you guys can go on YouTube and look at it. They interviewed him to like, why are you investing in this? And he said, if I had to do it all again, if I have to give a piece of advice, it would be to buy and invest in mobile home parks because of the demand for affordable housing. So yeah, it's not a lot of parks in the US. Like the government put more and more regulations of developing new mobile home parks and manufactured communities. So most of the times we end up buying. I know you have actually developed it brand new, Linda, and it looks fantastic, an RV park. But in most primary markets like Charleston, Atlanta, Charlotte, these places, they're trying to make it difficult to build, and they only grandfather in existing manufactured communities. And there are a lot of laws and regulations in that field too that you need to be aware of if you're going to buy there.
Yeah, so and I guess, one question that comes to mind is, I'm assuming that you've got things in place because if you're working with people who are lower income, right? They may struggle to make their payments. So I'm assuming that you've got measures in place. What are the concerns around that?
I mean, there are the different ways to slice the cake. I was about to say, I mean, I have experimented with all different methods. I done Section 8 because again, Section 8 people or tenants, they are the type of tenant that we would use for they're looking to live in mobile home park
Mhm.
communities. But there's pros and cons with that. I mean, just as an example, the pros is that the government's going to come in and pay you like clockwork. Beautiful. But they sometimes pay all the rent or they pay for a portion of the rent.
Mhm.
The downside with it is they are more difficult to evict if there's a problem. You cannot just go to the magistrate court and file. There's different ways you got to go about to evict a Section 8 tenant. There's certain standards that they're gonna want you to meet on a yearly basis. So even if this
Mhm.
tenant is paying nothing, they may destroy a window or door, and you're gonna have to fix it. You know,
Yeah.
to make sure you live up to their standard protocol.
Well, and an eviction process is differs by state, so you need to know what it is for that state. We actually had some experience with Section 8, and I was surprised to find out that Section 8 required the the tenant, right, to have certain standards met, or else they could lose their Section 8 offering.
Yep, that is true as well. That is absolutely true. You know, that they also have to meet certain guidelines. And I'm not saying you shouldn't use Section 8. I just want you guys to make sure you know the difference, the pros and cons of either.
Yeah, beautiful. Thank you. Okay. So market evolution, you already started into this, right? So pre 2020 and post 2020. So pre, less competition, lower investor presence, perceptions,
Beautiful
and
times.
interest.
Yeah, like I would say prior to 2018, it was like the Wild Wild West a little bit, right? So there was way more opportunities. You can even sometimes find parks or communities with a 15 cap. Okay. And we know that the more compressed the cap rate is, the more expensive it is for the buyer, right? But we are talking 12, 13, 14 cap. And I was fortunate enough to buy some of these parks at that cap rate. People were still not, I shouldn't say savvy enough, but interested enough to turn their eyes towards this asset class because the big institutional investors, they were so focused on, and still are to some degree, on attractive class A, B apartment complexes, you know, and hot markets like Austin and Dallas and so on. And that was beautiful for us, smaller investors that are not institutional. We could go in and negotiate, and the banks were not really keen on lending at that time. And that was a good thing because for the seller to be able to sell, they had to offer seller finance. And those terms are beautiful. No appraisal, no third party coming in, and no, it's pretty quick process. And that has changed since 2018, I would say.
Hmm. Okay. And then post 2020, right?
Yeah, now you
Increased
have more.
competition, market dynamics.
Yep, absolutely. Big investor group, BlackRock's, even, you know, big Vanguard, and then they are investing in this asset class now. So it's good and bad, like anything, depending on how you look at it. But the way I'm looking at it, yeah, it's a little bit more fierce competition to get the numbers to be really good. They're still out there, and you can still find them, but usually the parks we find there are good deals still is lower than 100 pads. And the reason I say that, Linda, is institutional buyers, they usually don't mess with parks that are 50, 60 pads. When they get above 100, that's their criteria, and they will come in, and there's a fierce competition, sharks and bloody water for sure. And
Yeah.
they have the money, you know, bank relationships, so it's a little bit more tricky to buy. To sell, on the other hand, is great if you can put together a portfolio over 100, because
Yeah.
now you're going to get top dollar for per pad.
Yeah. Beautiful. Thank you. And I don't know if you've already, and I'm putting you kind of on the spot. Have you thought about like what cost per pad are you looking for is like a good? I know there's always a range, right, on the quality and the amenities or the how seasoned it is, but like what is a good dollar per pad?
Sure, great question. Many answers. So here's the thing. I mean, obviously, if I'm in LA versus Charleston, you guys know the depending on where you are, right? Location wise in the country, that's going to dictate the price per pad. But let me put it this way: primary and secondary markets. Um,
Uh-oh, we lost Jens. Give us a second while he dials back in.
sorry about that. Um, so I was talking about the different location is going to dictate the price per pad, but you obviously have three different um, areas, right? You have primary markets, secondary markets, tertiary markets. I stay away from tertiary markets. They are small little towns in the middle of nowhere. Banks don't like them. Institutional buyers, they're not going to like it. If you want to resell, there has to be very good reason, personal reason, if you're going to invest there. Also, less contractors, less repair maintenance people of that sort. Primary markets are a little tougher to make the numbers work. Like I live in a primary market like in Charleston. Price per pad here is ranging from 80 to 120, depending on the home year age model. I also invest in secondary markets like Sumter and Florence, and the pad there could be 30 to 45. That's you 35 to 45. That's what I
And
see.
that's just the pad with the hookups, or that includes a mobile home on it?
That includes, that's an average. That's like saying the park is 80% occupied and there are some vacant pads in there. This is just an average across. Whereas before 2020, you can get it for around 20, 25, and you were doing pretty good. So that's gone up about 10 to 20,000 per pad.
Beautiful. Thank you. Okay. I love it. All right. So financial freedom through mobile home parks, right? So the economic resilience, you've started talking about that, demand and affordable housing and stability and lower tenant turnover. I don't think we talked about that one yet.
Economic resilience of yeah, we talked a little bit about the resilience, right? Demand
Yep.
for affordable housing and limited new development, and then stability and lower tenant. Well, I find out that the turnover is less in mobile home parks than in regular apartments, but that's just a personal experience I've had. So it's a little bit more stable. And
Mhm.
obviously the risk is also mitigated quite a bit of getting into this asset class, because you buying a 10-plex apartment or townhome, you're going to spend way more money than you would on, for the same amount of money you can probably buy 60 units or 60
Mhm.
pads for a mobile home. So you're spreading the risk and mitigating the risk. Even if you lose one or two tenants, you have 60 units now instead of a 10-plex, and it affects you less.
Yeah. Okay. And then pros and cons, right? So
Yeah,
oh,
that's pretty much it there. Pros, recession like 2020, COVID hit. I was juggling raindrops. I mean, we were doing so good, and that's probably one of the strongest times I've had, economic downturns, Still doing good, but and I'm not praying for more, economic downturns, but it certainly does not hurt this business.
mhm.
Um, Cash flow, um, very strong. They call them cash cows, these little mobile homes, and they are really strong. And you can make good monthly distributions. And I have a lot of limited partners that come in and invest with me and my general partner, and they just get a mailbox, a check in the mailbox each month. So that there's more pros for sure than cons. The cons, again, talking a little bit about that stigma, right? Owning a mobile home, why are you in that field? The banks don't fully understand it yet, so it's a little bit more tricky if you don't have a relationship with the bank to get a loan. There are a few banks that lend, but they gotta know you as an operator. Okay. um, Management, definitely, and you could speak for this a little bit too, Linda, because I do have RV parks, or a mixture of the two. RV parks are more labor intensive. They requires more eyes on site, and you definitely want to have boots on the ground to handle that. Whereas, because the traffic can come and go way more frequent than a mobile home, right?
Yeah.
So that is management can be a challenge if you don't know what you're doing.
Yeah. Well, that's very true.
Yeah.
So ways to structure a mobile home park. This was part of something I wanted to learn about was different ways to structure a mobile home park. And I can ask you questions or you can talk.
Sure. No, ask me questions. Let's do that.
So, I always get into like in RV parks, like, how can we structure it? Not only when you're designing it, but like, do you buy the land and only have the pads and then people bring in their mobile homes, or you own the mobile homes and you just lease it with the land and the mobile home? Or do you do a combination of you own the land, you own the mobile home, and then you kind of, you know, you kind of do owner financing on the mobile home to them. Obviously, you don't sell, I guess you could subdivide, but you don't really do that in a mobile home park. You just offer the package. You don't ever sell the land. So
Mm-mm.
what has been your experience with all of those options?
I've tried all those options actually, and I don't have an exact preference because, I mean, again, I'm looking at a couple of parks now. One of these parks I'm looking at, they are all tenant-owned homes, and all they do is pay like $300 pad rent. Market is 450 pad rent, so I can bring that up. It's a lot of value add, right? And if I go to the bank with that, they're gonna love it because they see mobile homes, if you own it, as a risk. They just want to lend on the dirt. What is the value of the dirt? How much is the dirt bringing in each month in profit from these tenants? So that is a very easy take on, I would say, if all the homes are tenant owned and you don't have to deal with the repair, maintenance, taxes, things like that. However, most parks that I'm buying, they are not like that. They are usually about 80-90% parked owned homes and 10 to 20% tenant owned homes. So there's more repair, maintenance, and so on. But when we go in, the goal is to, as quickly as possible, reposition that ownership and make it a no-brainer to the tenant and say, listen, we are new ownership here of the park. We want to give you a great opportunity to be a homeowner. And we give them a very affordable, attractive price. And we do a lease option to buy. Don't use RTO or rent to own. A lot of judges and courts don't like that, and it can get you in trouble if you ever get into the legal arena. So we have a standard lease, just like you would with any tenant. And then there is an option, a lease option that tells you at the end, if you behave, you pay your rent like you should, you don't, do crazy stuff and break the park rules, you have the option to buy this at the end. But the home taxes repairs immediately their responsibility.
Yeah. And I would assume that the lease option does differ by state. Like you still have to evaluate that. Because which states have you either done your due diligence in or purchased mobile home parks in? And have you seen differences by state in that as well?
If you said if I have invested in different states, or what was the
Or done
question?
your due diligence to compare the laws of the state? Because I know Texas is different. And I think it also depends on if you're like in a judicial state, non-judicial state.
Absolutely.
Um,
You
yeah.
you got to look into these things too, and even counties sometimes. I know you and I talked about that previously. Some counties are very landlord friendly, and
Mhm.
others are tenant friendly. And if you buy the park in a tenant friendly county, you may have a very big challenge to get rid of that apples in that park.
Yeah.
Georgia, I have some parks in Georgia, and they have different rules when it comes to eviction time, notices, and things. So it's important to know that, for sure.
And then another question is, dense of population per land, right? That's one of the things that I've noticed as a difference between mobile home parks and like RV parks. Um, but I think most people who live in a mobile home, it's like our long-term home, whereas RV parks, right, you could have that higher turnover. Like how much land do you usually allocate per mobile home? And I know you can give them an infinite amount of land, but what would be like the minimum, like a quarter acre? Or sometimes even
Yeah,
less. I'm looking at
yeah,
this picture.
yeah. You can go according. This picture here is a Shaw Mobile Home Park. I just sold that one last month, actually. It has 230 units. You only see a part of it here, but it's 230 units. So this was a big park. An institutional buyer came in and bought it, um, and they paid a good sum per pad for it. That's what the reason I wanted to sell it. But this was a total of about 35 acres. So that's just 35 acres, 230 mobile homes, a couple of RVs in there. The park I'm looking at now is 15 acres and it has 40 homes. So I, it all depends. Obviously in the primary market, it's going to be more consolidated and
Mhm.
smaller. And the smallest distance we can have here between each home is 15 feet for the fire hazard. But in a lot of the parks I have in the secondary market, there's more land. People have they definitely have more space.
Okay. So you've got, I mean, just over 6 mobile homes per acre, right?
Yeah,
And I'm just comparing to RV parks, right? We usually have 10 RVs per acre or more.
yeah.
And yeah. Okay. Interesting. Um, that's super helpful. And then, we did get a question, does the rent include services? And I think that's another difference that you and I were talking about between like RV parks and mobile home parks is amenities.
Yeah, so we don't have, when you say amenities, can you clarify exactly what you mean by that?
Yeah, and obviously RV parks, you can have everything from main camps to like water park theme parks, but usually, right, most RV parks have like dog parks, child areas, as well as
Mhm.
clubhouses, sometimes even pools,
Yeah,
even a store, right? So you've got on-site staff.
that's what I thought you meant. Yeah, so we don't do any amenities in our park. There are higher end, like Warren Buffett's park, for instance, they call Yes Parks, right? And they are 5-star, paved, everything is mint condition, pool, all that stuff. We don't have that. I just, not to say anything bad about it, I think they're beautiful to look at, but Florida has a lot of these. Okay. Um, the insurance companies are not keen on pools, trampoline, dog yard, period dogs, unless it's service dogs. The insurance will go up quite a bit and there will be more exposure to lawsuits and things like that if you have pools and dogs. And we trying to steer away from that unless they can prove medical documentation, obviously, for service dogs and stuff like that.
Well, and I would imagine that the more of that you offer, right, the more you have to charge, and that deters away from your target audience.
Yeah, yeah, that's true. That's true. In one of the parks, we did some pretty cool, and this is something maybe that will work. We use Spectrum Internet, and we offered all new tenants that we would pay their internet and cable, and that was part of kind of the concession there for them to come in, right? But we could individually control each unit. So if someone didn't pay rent, let's say 6B didn't pay rent, we can turn it off. And you'd be surprised how fast people will come in and be like, my internet is not working, my cable is not working. It's like, yeah, Mr. Jones, you didn't pay your rent. And they will find the money, yes, so they can get their internet and cable back working. So, you can be inventive and try to offer more for the client for the rent, but also in a way to help control that a little bit, right? Rent control. So, yeah,
It's a rent motivation.
yeah, yeah, it's a win-win.
That's a very smart move. Um, okay, and then who is your target clientele?
I mean, again, lower income families. I don't discriminate. We have all backgrounds, races, everything in our park. Um, I am trying to not invest so heavily in 4 bedrooms or larger because I've seen just over and over how many families just pack large families with kids come in and they just can't control them.
Yeah.
And that affects the rest of the park. So I usually stay around 3 bedroom max. That's what I've seen be working the best.
Yeah, and I was actually going to ask like single wide, double wide, combination or both, or is it predominantly one or the other?
Yeah, so I have a dealer license, so I can buy home directly from the manufacturing company, which is great. We can order 10, 15, 20 homes at once and they come and drop them. But double wides have just not been cost effective to purchase and to transport in relation to the rent I'm getting. So we have only purchased single wides and we have double wides, but they've been there when we bought it.
Yeah. Okay. Perfect. And then criteria for finding a good investment opportunity?
Wow, that's a lot of things going in there. I have a couple of criterias that, like if a Walmart is within 10 miles, that's a good sign. Okay. Because again, the clientele, they're gonna be more Walmart driven, right? So I want to make sure to find out where is the closest Walmart. And crime rates, demographics, such crime rates, job increases, population, is it going up or down? I used to do a lot more demographics when I got started, but now I know the areas that I'm investing in, so I tend to do a little bit less of that. But for someone new here that's gonna do, you guys have to do your homework and find out, if there's a big employer in the area. Like I have, for instance, the park I'm looking to buy now, Duke Power. Huge company, right down the street. I love that. Walmart is about 6 miles down the road. Love that too. No problem. So we got to just look for these little things to see where that clientele end up going to, right?
Yeah. Yeah, because people follow jobs.
Yeah.
Yep. Okay, and then you're usually buying existing mobile home parks. So kind of the due diligence of the jurisdictions have already allowed it. They've already done any of that. But when you're buying, I assume you still do some level of assessment with the local jurisdictions to make sure that there are no issues when you buy it.
Yeah, so due diligence is important, right? So again, from 10,000 feet view, because you can really, this is a conversation for a different time. There's a lot of items there that needs to be checked off. But first, you want to find out, are you going to try to do a bank loan on this, conventional loan? If you are, that changes your upfront questions quite a bit, such as, is it paved roads or is it gravel? Is it public water or is it on a well? Is it septic tanks? And if so, what is the ratio? Is it 4 homes per septic or 1 to 1? Or is it public sewer? Or is it a sewer plant? There are a lot of these type of questions. The bank, obviously, they don't like wells. They don't like gravel roads so much. Doesn't mean they can't lend. I've seen them, but they just tend to not. They gravitate away from that. So if you're going to do seller financing and the park, the numbers add up and the park is in a good location, that there's you can be less concerned about that unless you're trying to resell it for institutional buyers down the road.
Mhm. So what is your strategy typically? Is it to flip, right? Create the value and then flip for a higher price, or do you like to do more longer term buy and hold?
I prefer buy and hold, but we sell. Like we bought a park for 1 million 3 years ago. We got offered 2.8. That's a 1.8 million increase in a very short time span. So, obviously that is not the norm, but it's specifically a buyer who wanted that park, and we're going to entertain selling it, even if we didn't plan on doing that because the numbers are really good. But I would say 5 year hold at least is what we're asking if people come in to invest with us, because we do something called cost segregation studies. And those are huge tax deductions that each member in the entity can use at the end of the year. If you end up selling the park year 3, then there's going to be recapture of that taxes. So usually it's spread out over 5 years. After 5 years, if you sell it, there is no recapture. So you got to just make sure that the offer is very good to offset any recapture if you're going to sell within the first 5 years. So most of the investors we have coming, they know that they got to park the money there for 5 years.
Yeah. And then what about age of parks? Because I know that we've looked at buying existing RV parks before, and our concern was if, the, the infrastructure, how old it was it maintained? Do you have like an age limit on how you would look at buying an RV park? Or have you ever looked at it was on an old septic, but now there's city sewer when there wasn't when they built, and maybe invest the money to connect, or is it you kind of stay out of that realm?
No, I have connected parks to public water. Depends on the size of the park too, and how much the infrastructure, is going to cost me to do that. But the park I have sold now, the 230 unit, we connected to public water, which was a huge increase in price and value for the next buyer. But you have to, I mean, as far as the age of the park, if all the homes are like from the 60s, that's a red flag for me because that's just there's just too much heavy lifting. There is galvanized, there is, the homes are usually 12-foot wide instead of 14 or 16. It's just less attractive. Plus, if the old park is really old, they the old parameters and spacing between the homes and the lots are very different from what they are today. So if you're going to put a new home in there, you got to bring everything up to code. So now two lots may actually be one lot. So you may buy a park and you think it's 100 pads, but in essence it could be 50 because you need to do away with one to meet the new requirements.
Yeah. No, that's great. And we do have some questions. What have you ever had to move a mobile home park, and what's the cost of that?
To move a mobile home?
The
Yeah,
mobile
yeah,
home, yeah, sorry.
we have moved a mobile home. The cost of that in South Carolina is about 4,000.
Yeah. And then somebody asked, when someone wants to sell their home, do you require that the home stays in the park for a certain amount of years?
Yes, we hold on to the title. Great question. That's a great question right there. Because as soon as you give the title, they can the next day just move it out of your park. And that goes against our model. So if Linda lives in my park and I approach her and I say, Linda, you want to be a homeowner? We have an opportunity for you to buy this. The price is only 20,000. You can put 5,000 down. You want to obviously have something that's going to, some skin in the game from Linda here in this example. And we have in our contract that the title is delivered usually after 60 months or 5 years. Because at that time we have made up for the pad rent and so because that's the real income, right? Pad rent is what we after. And you don't want to have exposure. I did that in one of my first park. The guy was like, yeah, but you can just put in the contract, that I'm not allowed to move the home. Please give me the title. He paid me in full. And I did give him the title. And then a Sunday after church, I came back and the home was gone. Went to court. We won. But what good is that going to do me? I don't know where the mobile home is. I'm not going to pay 4,000 to put it back in my park. It's just like, it's just not worth it. And for us, we hold on to the title for many reasons. That's one of them.
Makes sense. Definitely sounds like you've got experiences. And then any best practices or tips you can share when you're doing any research to find a mobile home park? Like somebody talked about snow. Would you ever do them in the north? Why? Why not? Why?
I'm from Sweden, first of all. I'm all familiar with snow and cold, but also with the risk coming with the people fall, slip. It's heavy snow, the roofs cave in, the roads need to be, the expense of cleaning that up. I'm just not keen on doing that in states where there's heavy snow.
Makes sense. Yeah, great. Thank you. And then how to get started if you wanted to be an investor in a mobile home park.
I mean, here's what I mean, if you're going to take down a small park on your own that's next down the street from you, whatever, you can certainly do that. But if you want to be part of something bigger, you can get a slice of a big, big park. And then when it sells to an institutional buyer, you get a pretty good return on that money. Um, I mean, they usually say, should I invest in the horse or in the jockey? I think you should do both, but you should definitely invest in the jockey, the operator. Who is this operator? Has he done it before? How many has he done? What has been the outcome? How secure is my money? And I would probably join forces and collaborate with someone more on a passive basis in the beginning. I didn't. I took on a 40 unit park out the gate, and I learned some stuff along the way. that I probably could have avoided if I kind of did it with someone else first and then
Yeah.
branch off on my own.
Yeah, no, and that's huge because there's so much to learn your very first time, and you can invest in somebody else's and learn without having that risk.
Absolutely.
Yeah.
Yeah.
Um, Going back to the last slide, a question we had was what kind of interest rate would you offer the buyer if they wanted to, I guess, owner finance from you? Or,
Okay, so if I'm selling a park, you mean?
well, I guess I would ask it both ways, right? So if you're, because you said that one way to, find a mobile home park is, seller financing from the seller.
Yeah, I love seller finance, and I've stood on both sides of the table. The 230 unit deal I have sold now, we did seller financing with 20% down. We got a really, really high asking price. They met the asking price, but in return, we had to work with them on the terms. So they only wanted to put 20% down at 4% interest over 5 years. And that was based on a 25-year end.
4% is unheard of.
Yeah, but I got 4x, 5x the value on the park.
Exactly.
So, if I would have asked them to go conventional, my price would have halved, So I'm like, I'm okay. I got the price I wanted. I pay less taxes now because we kind of did an installment contract, so it's spread out over 5 years. Um, so 4% is very attractive terms, yeah. But I'm still kind of in the passenger seat on that one. They just took over the driver's seat, right? I'm still involved in it as they pay me each month. But if I were to buy it, I'm looking to negotiate today, right after this webinar, actually, with a guy, and I'm offering 15% down at 5%, and we'll see what he says. But that would be a slam dunk if he agrees to it. So I
That's
love
beautiful.
seller financing. Yeah.
Beautiful. Beautiful. Okay. And then when you're evaluating a good one, right, as the operator versus you're investing in someone else's deal, right? So if you were an investor in somebody else's mobile home park or an investor coming to you for your mobile home park, right? How do they get started? What should they look for?
If they want to invest on their own, you mean? Or
No, in this case, right, you just talked about as an operator, right?
yeah,
So if they wanted to be an investor in your mobile home park, right? If they
yeah.
don't know mobile home parks but want to invest in mobile home parks, like what tips could you give them on how to
I,
do that?
I think the first step would be for us to have a conversation on what their vision is over the next 5 years, why they are interested in investing in the manufactured community, what returns are they looking for? Are they looking for a huge exit where there's just a dump of money coming in at the end of a sale? Or are they looking for monthly distributions? It's got to be a win-win. It got to be a win for the person investing. They got to feel comfortable, with us as operators. I would ask questions, how many parks have you done? What has been the, entry and exit on these? And what are some of the what's the worst case scenario that could happen? Uh, I'm just playing the devil's advocate. I would ask just like I'm an investor, you know pros and cons, because not if someone says I guarantee you, as soon as you hear that, I would just turn around and run. There are no guarantees, my friends, and even if real estate is the best vehicle to park your money, in my opinion, um there are life throws those curveballs, and you got to mitigate the risk and make an informed decision, absolutely, but there is no guarantees.
Right. I wholeheartedly agree. And then tips for managing and optimizing these parks.
Any park over 50 units, you need to have an on-site manager. And that's your most important key player. You got to be an honesty, really good relationship. And I actually tend sometimes to give them a little piece equity in the park so they feel like, hey, it's my baby too. I'm going to take
Yeah,
care of this. Okay. I'm
yeah,
not going anywhere.
that's smart. That's smart. Okay, and then funding the deal. Like, what's your typical capital stack? Like debt versus investors versus your own?
I've done it all again. Most of the deals I put in small amounts of money because I put in a lot of sweat equity. I find the deal, I negotiate the deal, I lock it up, and I'm also the GP to reposition it to from this scenario to the next, right? Um, so 50% usually of the shares we give up to LPs or limited partners. 50% is for the GP side to operate and make sure everything is going according to plan.
Mhm.
Half of the deals we use conventional bank loans with banks we've built up relationship with. We know they know us, we know them. And 50% is seller financing. And that's the ones I prefer.
Yeah, yeah. And then have you ever done the SBA on mobile home parks, or
I have
does
not.
SBA do mobile home parks?
I have not. I know Freddie Mac and Fannie Mae and them are doing loans on big manufactured communities, but those are really tough to get loans for unless you have, like what I said, Warren Buffett, his Yes Park, the amenities and the pool house and that kind of stuff. The parks that we deal with, it's just too skinny of a deal to buy into those. So we have not done any SBA, no.
And a question we just got is, do you ever sell your seller finance notes to other investors when you want to take out some cash?
No, I have not.
Okay. And then Jens, any tips for success?
You know, as humans, we are inclined to be curious about new things. And I think that's a great thing. I don't believe in retirement, for instance. I think we need to be curious all our lives to learn new things. And I would encourage you guys to be open-minded about this asset class because it blew my mind about 8, 10 years ago, and it changed my life dramatically. Sometimes people ask me, "You're a doctor, why are you dealing with mobile home parks?" Well, I have total control on my schedule, and the more of these I do, the more I can spend time with family and friends. So definitely be open to investigate. Don't run into it, but at least look into it because there's a lot more pros than cons. So don't be afraid of how they look. You don't need to move in there to invest in them.
That's a good point, right?
Yeah.
Um, Somebody was asking about fences, right? Do you usually do fencing? Yes, no, why?
Not necessarily. No, I don't do a lot unless there's a reason for it.
Okay. And then how would you, so somebody asked, do you ever invest in 55 plus parks, older tenants?
I like those. I have personally not bought anyone. They don't have a lot of those here in South Carolina. Florida has a lot. And I'm sure Arizona and California do too. But I like them. That would be more those amenity types, tenant-owned homes, paved street, parking spaces. I like them, but the cap rate has been too compressed for me to want to buy one.
Good point. Another question is, how would you advise a new investor to approach an experienced mobile home investor?
Can you repeat? I'm sorry, I didn't.
So
I
I think
didn't.
it's if a new investor wanted to approach an experienced investor, like how would you suggest that? They're brand new, don't know much about mobile home parks.
I would just write down your questions and do a one-on-one phone call. I mean, we are not scary. We're humans. We're mortals, just like you guys are. So we just want to make sure you feel comfortable and understand all the pieces to the puzzle. The worst you can do is making a non-informed decision and say, "Oh, I heard it was good. Let's go. Here's my 100,000." Um, I think it just reach out. Even if you don't invest with me, I'm open to take questions. You can share my information. I'll be glad to help out for sure.
Okay, great, thank you. And then before we'll get to open Q&As, just recognize that the part of this webinar series is not only to educate, but also to bring opportunities to everyone, so you can connect with us as well. And we do have these weekly webinars. And next week, we'll be talking about adaptive reuse. And of course, I was like, what does that mean? And it's when you're taking an older building and making it into something new. And I think that's very creative space that I hadn't seen before. But wanted to now open it up for any questions. So go ahead.